For more on the demand picture, let's bring in Wedbush's Matt Bryson on the CNBC Newsline. Matt, good morning. Happy holidays. How will investors know when it is time to get back into chip stocks? I mean, there's a lot of pain priced in, but you still haven't seen certain sectors like auto and analog feel the pain. Do they need to before you can become bullish?
I certainly think that, yes, we've seen kind of the pain, if you will, move across sectors. So you saw it in handsets, then PCs. Now cloud computing is getting cut. I would expect that you also see analog and auto suffer from both the slowdown in consumer and enterprise spend.
Matt, talk to us about some of your picks. I understand you're bullish on Micron. You have an outperform, even though they had this relatively weak outlook for this fiscal second quarter. Tell us about why you're picking Micron and some of these other ones, such as NVIDIA, that you're bullish on.
So the names that I'm picking, I think there's two themes. One, with Micron, it's not that memory turns anytime soon. If anything, the news that Samsung's spending more or potentially spending more on fabs is a negative indicator for the memory sector. But with Micron, historically, they do bottom at around book value. So for them, tangible book is in the mid-40s. So you don't have a ton of downside. And historically, when they've hit that bottom before, they've often been the worst player in the space. So the worst technology, there have been questions about their balance sheet. None of those questions exist today. They arguably have the best DRAM bit out there. They have a very strong balance sheet. And so I would argue that the stock should bottom somewhere north of that tangible book value. So I just think you're at a bottom. It's hard to pick. It's hard to know exactly when cycles are going to turn, and so now is a good entry level for Micron, even if the cycle doesn't turn for 6, 9, or even 12 months. With other names, where I'm positive has more to do with share shift. So, for instance, AMD, I see them continue to take share from Intel. So even though the server market might not be as strong, I think some of that gets offset with share shift. Same thing with Taiwan Semi. There again. You have them benefiting from.
And Matt, I'm interested, though, in picking NVIDIA and the fact that you see these green flags around the gaming market. Of course, there has been concern and questions about whether gaming demand did benefit from a pull forward and how much that demand will be sustainable into next year.
Yeah, so with NVIDIA, we actually have a neutral rating. Having said that, I think there's two pieces to their business. The gaming side has been the part that had suffered over the last 6-9 months. I think there two things are working in NVIDIA's favor. One, what we're seeing this holiday season is enthusiasts are still buying, and so they're getting a bit of a faster pull down in inventories, a bit of a demand bump from their new products coming out, and then two. NVIDIA, again, in the PC space, it was earlier to see the slowdown. And so NVIDIA, a couple quarters ago, started cutting their production. So I think they're further along on the consumer side in terms of working down their inventory. So I think on the gaming side of things, they actually have a slightly better outlook than they did, say a couple months ago. The reason I'm on the sidelines with NVIDIA is more on the data center side of things. There, I think 3 years down the road, 4 years down the road, they are still the market leader in AI. AI is a wonderful sector to be in. It's just a question of over the next 6 to 12 months. We just heard about AWS potentially pulling back spending. So is there another reset in their AI business? Before they get to see the benefit of being the market leader again.
All good questions. Matthew Bryson, thanks for your insights. Wedbush, talk to you again soon.